Hi, ladies and gentlemen, and welcome back to another episode with Axis Mutual Fund. As you're probably aware, we try to meet you once or twice a month to try to help you understand about the different strategies about investing, our house views on funds, on market outlooks, NFOs, etc. And more than anything else, I think the market outlook is something a lot of even I actually look forward to here. So we've seen a lot of instability in the market recently. Markets are off of their all-time high valuations. We've seen a few potential geopolitical shocks in President Trump taking over in the US, threatening the whole world with tariffs, etc. We've seen China have a resurgence in their economic growth. We've seen some instability in the Middle East, etc. So I think the question that probably plagues a lot of investors is, what do I do with my money? Should I invest more? Uh, as traditionally, and as a house view, we advise our investors that, whenever the markets are low, it's a great opportunity to invest to accumulate more units at a lower value, so that in the long term, there is a potential to create wealth and to achieve your financial goals. But every day it looks like a new low. And to help us with this predicament, we have Shikha with us today. Shikha is a senior product manager with Axis Mutual Fund with over a decade of experience, and I think she has a lot of experience across the equity and the debt and hybrid mutual fund classes across all three. So, without further ado, Shikha, maybe let's get your views on a quick market outlook. And I have a few very sticky questions for you. Uh, and for the benefit of the viewers here, we'll also take a few questions in Hindi if that's okay with you.
Yeah, absolutely okay.
Great.
So, thank you, Siddharth. I think you set a good context. Market is fifth consecutive month of negative returns, and no surprise that there's a lot of noise in the market, which is making investor a little restless and worried. But to be very honest, and I'll choose my word here and say that this negative returns or the fall in the market was much anticipated. So even in the earlier calls with me or with someone else in the team or with the fund managers, you will hear this word that this was anticipated. Largely on the account of that, one, the valuations were really elevated. There were concerns of a slowing growth down in the economy. There were concerns on the earning growth getting cut. And of course, the geopolitical uncertainties, which you mentioned, has been increasing from quite a while now. So all this boiled down together is leading to a market fall. And because of this, what we can see is a lot of FII money moving out. So we can see that in this 2025 year itself, there's an outflow to a $4 billion of outflow from FII. Whereas, even though the DII is bringing in money of $6 billion, we are still net not seeing the market pick up. I think it's because largely that market is not able to recognize some of the positive aspects which are there in market or the positive triggers. Like we have not seen much of a triggering in the market even as after the tax cuts in the union budget, even after the RBI has done a repo rate cut. There have been increased government spendings, and I think I'll cover all of them in detail. But all these points are getting missed in the market, largely because market is worried about how the currency depreciation will bottom, when it will bottom out, and how the Trump or the US policies will react, especially on the tariff front. So there are a lot of concerns in the market that. But bringing you to slightly on the positive side, that what happened because of this correction is that the Nifty valuations is now much more moderated. It's closer to its 1 year forward PE, which is a good sign. And also, if you look at compared to the emerging markets, the India premium to the emerging markets, we are now very close to the long term average. So overall, we are more attractive in the foreign markets now. One, the valuations have been slightly better in the foreign market space. Two, it's because our macroeconomy compared to the other major economies or the emerging market economies now is stabilizing. For example, if I have to talk about the GDP growth, right? The GDP, which was expected in the Q3 was 6%, that number actually came out to be 6.2%, vis-a-vis the Q2 numbers, which are 5.6%. So though it's lower than what last year, and it's still low, but still we have seen a much better than expectation there. The inflation is also, if you look at the headline inflation, is 4.3% for Jan, which is much lower than December number, which is 5.2%. Even if we look at the core inflation numbers, which is like 4%. So which is below 4% and expected to be below 4% there. So, from a macro perspective, we can see that things are working well for us. Even we can see the private consumptions doing well, the government consumption increasing. This all helping the GDP numbers being strong. If you look at the private consumption growth, you can see that recent numbers were 6.9% year on year, which was 100 bips pickup from the previous quarter. And government spending also is now 5 quarter high at 8.3%. So macro aspect of the economy is doing well. From RBI perspective, we can see an anticipated rate cut because, of course, like we mentioned, the growth though is looking improved from the expectation and compared to the last quarter, and still not, not expected to do well going forward, and lower than compared to the last year. But inflation is quite moderated here. The liquidity has been a big concern, which RBI is addressing in the last 2 months. At least they have done a lot of liquidity measures. So, from that perspective, the entire market sees a positive side of it, but with a lot of concerns in the market. And nobody can tell you when the bottoming out is there. So that becomes a major concern, that when market will start picking up the positive cues in the market, that becomes a crucial point at this time. So I think that is more from a domestic point of view, that how we are seeing the market.
Yeah. And I think we were having a quick discussion offline. There is just too much happening on the in the global geopolitics to sort of call out or to even predict, right?
Right.
So I think we will probably come back with a we will speak to our investors once we have better visibility there.
Yeah,
Right.
because it's more of fear which is working out in the global market. There's action being called, retreated. Every day there's a new action, but what we can see is market reacting more to the fears in the market. But let's see how things shape up there. We also expect Fed to do some rate cuts there, given that their economy is not doing well. U.S. economy is expected. Even the Bloomberg, if you'll see now, is talking about slowdown in the economy, US economy. So I think that those all points really something which are causing uncertainty in the global market.
Yeah. Fair. Thanks for that. I think uh, this conversation thus far sets us up beautifully because I think to quickly summarize what you've said is we've seen equities see some drawdowns. We've seen the debt market sort of stabilize or to absorbing a lot of shocks that the market is throwing at it. Is there really a product that can balance
See,
both of these aspects? Yeah.
one message which I want to give investors is that one, which you were initially asking also, that people are worried whether to invest more, whether to stay invested, whether to put more money or take out your money. I think this kind of drawdowns in the market are all have always we have seen it. Even if you look at a 2020 period, investors waited for a long period of time that the market was sidelined, and they have waited in a side that when market will pick up, we will get into it. But a lot of them, especially miss the rally because you don't know when their pickup will happen, right? So one, if you're invested somewhere, please remain invested, because when you come from a longer viewpoint. So from a longer term, equity markets are expected to do well, right? But if you want to come in right now and you want to take advantage, but like I said, we have global uncertainty, rupee depreciation, all this thing are becoming much major challenge and concern in the market. So BAF is a product which you can go for, and mostly because of the three reasons I will give. One, you are there in equity, but the fund manager is taking call on behalf. So, of course, from a taxation perspective, your gross equity will remain 65%, but you will take a net equity call, you will hedge the remaining portion, and the rest of the equity can be invested like 50% or 55% based on the fund manager's view. Two, an equity fund manager has the flexibility to take a call on whether he wants to be large cap tilted at this time or he wants some exposure in mid and small cap. So there is someone who is taking that call of how much equity and how much beta and how much market cap allocation. A third point, at this point, like I mentioned, the expectations of repo rate cut and the RBI actions, debt is a very attractive space. Okay, especially if you're on the longer end of the duration, you get advantages of yields coming down from here. So you get advantage of debt as well along with equity. So you need not worry about moving from one fund to another, getting into a debt fund or getting into a large cap or mid cap. You can just get into a balance advantage fund and get your debt benefit, get your large cap, mid cap, small cap call taken, your net equity call taken. So basically, an approach of dynamic management or a 360-degree look into the market and investments. So I think that's where I feel that BAF is a product to go for.
Yeah, thanks. So, but I think we hear you on BAF, etc. But let's dig a little deeper, right? Maybe let me actually open up the floor to a few questions also. So, ladies and gentlemen, there is a question box on the Zoom link that you or the link that you joined, or if you're on YouTube, you can add these questions in the comment box below, and I'll take it up here. I have a dashboard. So, there's a couple of questions that a few people have given while they were registering for this event is that, uh, and I'm paraphrasing here, investors in today's day and age do a lot of primary research on portals like value research, money control, etc. There is a basic filter on performance. Is that the right way to judge a BAF?
See, looking at performance is not a right way to judge any fund because it's a historical return. So I think all of us, if you read through now, we will come across a research which says that a fund who has been a quartile one uh, did not consistently remain quartile one throughout the years. So a quartile one fund can move to a quartile two, three, and quartile four fund can a year or two time go to quartile one. And jumping from one fund to another fund, one, it's not possible to understand which fund will do well, and two, it gives a taxation impact. I think the best way to look at is the what is the fund holding at this point in time is the crux of whether you should be investing into it. For example, in BAF, at this point, if I have to look at BAF, what are the filters I will put is one, what is the net equity level? Is it actually fund managers have reduced it in this period or not? Or it's been consistently being managed like a normal fund? Two, even if it's reducing, what is a large, mid, and small cap allocation? Is it still heavy on mid and small cap? If it's yes, if you are aligning with a long-term goal, you want to take a risk, coming into mid and small cap segment, please go for it. But if you want to play the market dynamics, change it, go to let's slightly towards large cap right now, and then eventually things turn out well, you go towards mid and small cap as well. So that dynamic management, I think, something which one needs to look at again. Third, look at the beta of the fund, which tells you that how much risk the fund is taking. So if a beta is basically a measure that if your benchmark falls by 1%, how much the fund will fall for. So definitely look at the beta of the fund. Look at the debt positioning of the fund. If it's very passive, you're invested towards a very lower end, then you're not getting advantage of debt. So there's no point of getting into BAF. You're not getting advantage of both the asset class. So if your debt should also be actively managing. So you should look at the duration. Right now, if you look at the market view, the longer end of the curve looks very attractive. So if in our view, if a fund is having a longer duration period, that's something which is good for the investor at this point in time. So look at that as well. Look at more stable returns. That's not today's return. You basically look at how it was a few months back, a year back, kind of return. At least last 1 year is something which you need to look at in terms of how the fund has been doing well. So I
Um,
think these are 4, 5 parameters. If you don't want to drill down into the sector level, at least I think this is the level which you need to look at.
I think that's a lot of clarity you've given. So maybe to the ladies and gentlemen watching this, like Shikha said, I think just basis of filter of performance may not be enough. Uh, these decisions do require a little more effort, a little more research. So, Shikha, another question I see here very early on is what is the difference between a balanced advantage fund and a multi-asset allocation fund?
Okay, I think very fair question. A lot of people get confused because both are hybrid funds. So balanced we talked right now. Multi-asset is, you have equity, you have debt, you have gold, you have silver, so you have commodities as well. So there are multiple assets, not just the equity and debt component. So both of these funds have their own pros and cons, kind of. Like balance advantage plays only with two asset class, whereas multi-asset will have a multiple asset class. The more active management can be done from a debt perspective is in balance advantage because of the taxation of equity taxation you will have 65% invested in equity in balance advantage and in most of the multi-asset fund as well. So remaining space is very limited. So if you're looking for, buy an additional gold and silver based on your views, you can go with balance advantage and take an additional exposure through gold ETF or silver ETF. But if you're looking for, no, I don't want to take that call, I'm okay with limited calls on gold and silver, and I don't want to get into ETF, I want a fund manager to take that call, then multi-asset is a space to look at. I think both funds plays different roles that way.
Right. So I think that that sort of helps because nowadays I think it's because the nomenclature is so similar, right? They're used interchangeably. So yeah, I think if the folks here need a little more help, visit accessmf.com. We have a few beautiful articles to help you learn the difference between these funds. So yeah, so let's get on. This is one of my favorite questions. I won't lie. How does Axis Balanced Advantage Fund differ from different Balanced Advantage funds in the market?
See, I would rather not comment on how the market or industries are, but I can tell you how we manage our fund and what are the USPs of our fund. One, like I mentioned, that a balance advantage should be a dynamic approach, a 360-degree approach. And that is what even what we do at our end also. So if you look, how do we manage our balance advantage fund here is, we look at what large, mid, and small cap allocation should be. We look at how much beta of the portfolio should be, how much net equity level should be. Should we take some credit in that space? Should we, where on the duration has to be? So all the approaches has been considered while managing the Access Balance Advantage Fund. And how do we take call into that? We have three parameters attached to it. One is the model approach. One is the fund managers where he can take an active call. And third is a asset allocation committee, which I will say a USP point for us. The first one is the model, which they can feed in the data like PEP compared to the global markets, your market cap to your GDP ratios, your macros like your forward-looking CPI, your forward-looking currency expectations, all these factors, and as well as the momentum like flows in the market. All these factors together, we run the model and see that in what range your equity allocation should be. So that gives you a fair idea looking at how macros and valuations are playing. Then comes the fund managers, of course, who takes an active call on the sector's allocation, where on the sector, or which sector need to be heavy, where at this point beta should be of the fund, and how much large mid cap allocation I should take at this point. So all these calls have been taken by the fund manager of equity, and on the debt, the debt fund managers take a call on the duration and on the credit side of it. Then comes an over and above committee approach, because a valuation, the constraint of any model is that there are non-quantifiable factors which cannot be counted, like geopolitical scenarios, for example, some expectations around some, let's say, election kind of events. So those are the events which cannot be very well accounted into a model. And so instead of one brain thinking about what I need to do about these events, there's a committee approach which meet on a monthly or a more frequent basis if required. And it talks about how these factors will impact, for example, the geopolitical uncertainties right now, how this is going to impact the different parameters. So there's a CIO, there's a head equity, head debt, a product head, fund managers, all together sitting out and discussing the allocations. So it's not one brain pitting, but actually a group of people discussing and ultimately resulting into the allocations in the fund. However, this is how we manage it very dynamically. So you will see last year, if I talk about the same time, we were somewhere close to 70% of equity levels, net equity levels. Now we have come down close to 50%, 51%. So this kind of dynamism we have in the fund. We have increased small and mid cap allocation earlier. We have decreased it again. We have been playing around the duration call. We have taken the duration call there beyond the longer and at this time. So we're actively considering, every parameters of a fund into this.
Right. So maybe let's dig one level deeper into this, the strategy approach that we've discussed. Uh, what is our equity split? Maybe you referred to it very briefly when we started the discussion. So maybe if you could shed some light on our market cap split within equity and then within debt also, if you could maybe spend a couple of minutes so that the investors here get a flavor of how our fund is positioned, how what it comprises of, etc.
Sure. So if I talk about equities here, so and I see the last 1 year or so, kind of like, let's say, one and a half year. So in April 23, we were around 58, 59%. We increased our equity allocation from that time. We brought it down to 70% or so. And then you will see higher above, like 68, 69% till May. We are slightly started reducing post that, and now eventually we ended to 50, 51% then. So now how you will see is the graph going like this and then coming down again. This have been very actively thought through, and this may not be straightforward. This could be dip in some month and increase in some month. For example, June 20, sorry, August we were around 70%. Then we few points we have reduced it. Then December we went back to 70. So this is kind of dynamic we have shown in the net equity levels here. If I talk about the large mid cap allocations here, so right now we have very large cap tilted because we believe that at this point large cap will do slightly better in a going time. So what we have done is we have you will see of an equity allocation. I think around more than 80% will be around in the large cap space, and remaining in a mid and small cap space, kind of. For I think that people should refer to our fact flyers on the website, and fact sheets which give this number to track it. So I think people, if you're interested in the fund, please read about it, go through flyers. It will tell you the exact each allocations which you have kept for all of it. So that will give an understanding, and that will give you tracking understanding as well. On duration front, on the one, so we earlier had some bits of credit, which with credit growth slowing down, we have reduced that as well. So you will see us going completely long on the duration. So right now, the maturity, the scheduled maturity is around 15.94 years, and duration, MAC duration is around 6.36 years. So we are on the longer end of the curve. Overall, the debt portion, how we manage is we prefer it to be high quality. So you will have corporate bonds and GSEC largely there, and you will maintain duration between 1 to 7 years. So now you will see the current duration is very close to 7 years there. So this is how dynamically we manage the fixed income. I'm not telling you like exactly look at this number because these are the month-end numbers, but I will say that track these numbers. This will give you an understanding that how the fund is being managed, and then you can actively take a call on it.
Right. I think, Shikha, the very relevant question and pertinent to this is you mentioned briefly about the equity holding that the fund has. So by virtue of that, how is the a balanced advantage fund taxed? So if I was to invest, will I get equity taxation or will it be how's it taxed?
So when I say we are currently at 50, 51% of net equity, I mean it's a net. So what we do is we at least maintain 65%, which as per the regulations and income tax acts, we need to be 65% in equity and equity related instruments to be taxed as equity. Right. So what we do is take an arbitrage position, how arbitrage fund works. So you hedge the position. So you do not get impacted by volatility in the market. Only your net positions will give you impact on the changes in the market. So you hedge that entire position there. So this is how we manage it and keep it into the net equity, keep it into the equity taxation. So ultimately for investors, we will keep it an equity taxed fund.
All right. And I think someone has caught on to the hedging piece. What specific hedging strategies does the fund employ to protect itself against downside risk during periods of market decline? Oof, can we answer that? Uh, No, okay, we'll go on. I'm really sorry. So, whoever sent this question, feel free to reach out to us to our call center, and someone will be able to help you there. Unfortunately, we're not allowed to answer these specifics on such platforms. All right. Is there is it expected to have an increased allocation towards mid and small cap stocks going forward, given they are down significantly from their highest valuations? You just mentioned that we've taken a house call that large caps are a little more stable in the current market scenario. But are we also thinking of going long on mid and small caps?
See, mid and small cap, I will say in answer it this way, ki the valuation they also have trimmed down, but it's not as much as large cap. We are still higher compared to the historical levels of the long term average, and in a shorter run, at least there could be a chance that there's uncertainty persist in the small and mid cap space, but it doesn't mean it will across the space. Any which ways, what to believe that going forward, market will be much more stock specific there. So there are selected pockets in mid and small cap which are expected to do well, and that's where the fund will take position. The fund are currently being positioned into those space. So are we completely moving out of mid and small cap? The answer is no. But the allocation is much more tilted towards large cap at this point.
Fair, fair. Now, a few very interesting questions coming here. Uh, let me probably let me take them in reverse order. Um, so there is this investor who is age 28, female from Delhi. Is asking, is BAF the right choice for me to start planning for my child's future? Ma'am, I'm assuming by future you mean either education or wealth creation. Let's assume education as a goal. So,
So any goal which is close to 10 years, you can map it to any goal which is a long-term goal. Let's just see it in that way. See, BAF is a good choice. See, usually what's mindset of people is that if you're very early on the age, buy more equity. If you're close to retirement, buy more debt. Okay, but it's not just the only parameter to look at. One needs to look at their own risk appetite. One, if volatility in equity is giving you sleepless night, then please don't completely go into equity. But if missing out is giving you FOMO fear, then also don't just go completely towards that also. So balance advantage is a fund where you can have a mixture of both. You need not be much worried about volatility. It's also fund also get impacted by equity volatility, but your fund managers can reduce the equity levels and manage it better than a pure equity fund kind of. So that's the advantage of it. And two, you will have equity exposure, so you're not for the long term wealth creation to that one. So perfect measure, of course, WAF is good even if you are like 25, even if you are 30, you're 40, 50, or I think irrespective of age, WAF is a good product because you have allocation towards both the set class. So for a long-term goal, I think yes, definitely you can go for WAF.
right. So there's actually two questions that are clubbed together here. Uh, is BAF the right? Is BAF a suitable product for a newbie investor? And is it better to invest in BAF via an SIP?
So, like I answered, doesn't matter you're 25 or 40 or 50. BAF is like a go-to product for any kind of investor. That is what I believe, given what risk appetite they have. Like if you are you're 60 and you completely don't want equity volatility into your life, then probably choose a more fixed income product like we have income advantage with us kind of product. But if you want an equity exposure which lesser equity volatility kind of, then I think BAF is a product irrespective of the age. Um, to answer, sorry, what was your second question?
Second question was, is this a better product to invest a lump sum or into venture into SIPs?
I think it's depend on your goal. At this point, I'll say go for SIP given the market. So, but that it not be a monthly SIP. So you can do a weekly SIP kind of. So there are different mechanism to do it. You can do an STP kind of scenario here. So look at those different venues to invest in. You can come through SIP and in the future, if you feel like market is bottoming out and I can put money at this levels, then it's a good product for lump sum as well. So it's more on what investor wants at this point in time, but I think both options are good enough options based on what the goals are and investor thought processes.
Right. But actually very interesting, because we were looking at some data internally, and I think a lot of our investors are sitting on high cash positions, either liquid fund or money market or arbitrage to a certain extent. So do you recommend, or rather, do you think this is the right time for them to say start an STP into balanced advantage, given that you've already described the benefits that we have the perfect mix between equity and debt. So do you think that's the right approach to deploy that part cash?
See, cash, if you are having a very short term goal, like you're looking for a couple of months kind of, please do not do that because market is very uncertain at this point in time. But if you're looking from a long term goal perspective, please understand this kind of drawdowns in the market or the fall in the market are good opportunities to get into the market, but you need to have patience along with it. So we were just doing one analysis. I'll not quote much of numbers, but I'll tell you that so with every dip, if you invest in market, the long term returns are very good. Okay, just and this will stand true for most scenarios for it. So if you're looking to get into the market and not wait, for market to raise again, please, you can just buy units at a lower rate, more units at the same amount of time. So get into an SIP SWP mode from your liquid strategies that you are using, and get into the market even at this time. But your goal should be from a slightly longer term point of view.
Right. And that actually brings us to another set of questions that are very interesting. Is that of how long should my outlook be with BAF?
I think come with at least 2 3 years kind of outlook. So for pure equity, we say 3 years. For thematic kind of ones, we say 5 years. For BAF, I will say at least 2 3 years is what one should look at.
Okay. And I think we only have a couple of questions left. I'm not going to trouble you too much now, Shikha. Uh, again, I think this is sort of repeat question. So there's two repeat questions. Let's take the second one first. How has Axis Balance Advantage Fund performed during market drawdowns? If you could shed some light there.
See, like I said earlier, please do not look at the historical data. One, honestly, I don't have the data ready right now with me, but there are websites I think I use which you can check around it. But don't just go by returns. Definitely, fund is doing very well right now. It has seen its phases. It has seen its good time. It has seen its bad time kind of fund. I think we'd more look at the fund positioning right now and what it can do. So even if you looked at the recent drawdown, which I talk about, the fund is still, is able to beat the benchmark and doing quite well.
All right. Now, maybe we'll take one final question, and pretty straightforward now. You already answered this, so probably whoever has joined a little late. How does an investor differentiate between balance advantage and multi-asset allocation? What is the difference?
Okay. Um, See, I'll just repeat. It will be repetitive answer a bit, but I
Sorry,
need
Ishika, if
to.
let's actually do this, maybe people have joined late. Let's take this in Hindi. तो बैलेंस एडवांटेज और मल्टी एसेट एलोकेशन फंड के बीच में फर्क क्या होता है?
ओके, सो बैलेंस एडवांटेज फंड जैसे हम बात कर रहे थे, इट्स इक्विटी प्लस डेट, जहाँ पे आप अपना इक्विटी लेवल कम ज्यादा कर सकते हो बेस्ड ऑन द फंड मैनेजर्स व्यू। ठीक है, यहाँ पे मल्टी एसेट फंड इज इक्विटी, डेट, गोल्ड, सिल्वर काइंड ऑफ कमोडिटीज देयर, right? So wherein equity levels are also changed a bit based on the market view, और आप उसमें commodity exposures भी ले सकते हो। So both fund has pros and cons. It's more on कि आपको क्या चाहिए है। So like if you are investing in gold ETFs, gold silvers, and you have your own gold depositories with you, and you do not want to further take it, then BAF is a fund क्योंकि आपको डेट पोर्शन ज्यादा मिलता है, एंड स्पेशली इन दिस टाइम व्हेन you're going through a rate cut cycle, that is something to look at. You should have some exposure of debt into it, and then you can smartly play around the equity levels there. But if you are like nahi, if you want a fund manager to take a call on your gold and additional exposure apart from what you have, then come to multi-asset, which gives your gold, your silver exposure, and they also technically we take a call of reducing equity based on the market view. So there's a difference between what exposure, क्या exposure है दोनों fund में। एक में बस ये होता है कि debt exposure थोड़ा ज्यादा हो जाता है because you have more space to take that, like 35%, up to 35% we can have there, which gets limited in the multi-asset fund. So that's I think the key difference. Where do we want more exposure to?
राइट, तो मतलब एक चीज तो आई थिंक शिखा आपके बोलने से ही समझ आ गया कि बैलेंस एडवांटेज फंड इक्विटी और डेट को एक परफेक्ट तरीके से बैलेंस करता है, राइट? जो
Right.
एटलीस्ट हमारे इन्वेस्टर्स को दोनों शॉक्स के हिसाब से प्रोटेक्ट करके रखेंगे टू अ ग्रेट एक्सटेंट।
And people can any time look at the gold ETF and silver ETFs in the market to have the additional exposure.
Right. So I think, Shikha, that's all of our questions for now. That's all the time we have for today. So before I let you go, maybe if you could quickly summarize, and this one in Hindi, ki balanced advantage fund we've discussed in great detail. Uh, एक इन्वेस्टर को बैलेंस एडवांटेज फंड इस मार्केट सिचुएशन में क्यों कंसिडर करना चाहिए? अगर आप इसे क्विकली समराइज कर दें, आई थिंक सो दैट जो हमारे दर्शक लेट ज्वाइन किए हैं उनको काफी हेल्प हो जाएगा इन दैट केस।
Yes. See, जो दर्शक है, आई एम श्योर एवरीवन इज जॉइनिंग कॉल क्योंकि सब लोग वरिड है क्योंकि मार्केट में बहुत नॉइस है कि क्या होगा। देयर आर प्रेडिक्शंस कि मार्केट कुछ टाइम और अच्छा नहीं चलेगा। दे आर सेइंग दैट कि हम एफआईआईएस कंटिन्यूअसली फ्लो आउटफ्लो देख रहे हैं हम। सो अनसर्टेनिटी है, राइट? बट हमने ऑलरेडी करेक्शन देख लिया है। अब आगे कितना करेक्शन होगा बिकॉज देयर इज अ मिक्स मैक्रोज आर स्ट्रांग अभी हमारे यहाँ पे। आरबीआई इज डूइंग नेसेसरी एक्शंस फॉर दैट। US economy is not doing quite well at this point. So all these things mixed together, ऐसा नहीं है कि इक्विटी मार्केट विल नॉट डू वेल, राइट? और आपको ये भी नहीं पता है कि कब कौन सा ट्रिगर है पॉजिटिव रिटर्न्स की तरफ मूव करेगा। सो अगर आप ये देख रहे हो कि ऑफ दिस अनसर्टनिटी मुझे अच्छा ऐसा फंड चाहिए जो मेरा इक्विटी लेवल खुद ही चेंज करे, तो मुझे इन एंड आउट नहीं करना पड़े, मेरा टैक्सेशन भी बचता है, दिस एक्सपर्ट हु इज डूइंग इट फॉर यू, मुझे रेट कट का बेनिफिट भी मिल जाए, मुझे मार्केट में लिक्विडिटी आईपीआई पुश का बेनिफिट भी मिले, जो भी लिमिटेड सेक्टर्स मार्केट में वर्कआउट कर रहे हैं सर्टन लेवल, लार्ज कैप में, स्मॉल कैप में भी, विच एवर पॉकेट्स आर डूइंग वेल, वहां पे एक्सपोजर हो जाए, एंड एट द एंड देयर सम एक्सपर्ट टेकिंग अ कॉल ऑन कि मेरा इक्विटी वापस कब इंक्रीज होना चाहिए, then you can consider PAF. मतलब it gives you a holistic change in the portfolio. Somebody taking a call आपके behalf पे कि मेरा equity level क्या होगा, debt levels क्या होगा, duration क्या होगा, large mid cap क्या होगा, beta क्या होगा, ये सारा चीज एक fund manager consider कर रहा है. So that is I think where this fund is placed. और इसलिए I think लोगों को this segment को अभी देखना चाहिए.
राइट, तो आई थिंक ये एक तरीके से आपने जैसे एक्सप्लेन किया, एक ऑटोमेटेड फंड ही हो गया जो दोनों एसेट क्लासेस को भी मैनेज कर रहा है, हमारा टैक्सेशन भी मैनेज कर रहा है और मार्केट मार्केट वोलेटिलिटी को भी मैनेज कर रहा है. राइट.
Yes, absolutely.
ऑलराइट, सो शिखा, थैंक यू. Thanks for your time today. Thank you, ladies and gents. So, we hope to see you back very soon. Visit axismf.com for any and all details for Axis Balance Advantage Fund. You can download our mobile app. We are available on the Android and on the Apple App Stores. We are rated 4.7 on the Apple App Store or 4.6 on the Android Store. We have over 5 million people who are already using the app. So go ahead, visit us, get whatever information you need is available. Otherwise, we're always a call away. So thank you for your time. Enjoy your weekend. We'll see you soon.
Thank you everyone.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.